So many of you have asked about my opinion on QRTEA stock, a stock that Michael Burry actually owned, and he sold some of it in his latest 13F filing. But many of you still own the stock because you believe it's undervalued. And the stock is down over 92% from its highs, and now it's sitting only at $1.11 per share. And this company does have a lot of problems with debt. Their own bonds are priced in, like the company is going bankrupt tomorrow, which is going to take a look at that. But they had pretty much the same situation in 2009, and after all the fears were gone that the company is not going to go bankrupt, it went up over 1,658% pretty much in the next 5 or 6 years, which has been a pretty amazing thing. So in this video, I'm going to go over QRTA stock, which is I believe Curate Retail, and I'm going to review their their debt profiles, their bonds, and see if maybe we can have another repeat of what we had from 2009, over 1,650%, or maybe the company is actually going under and we shouldn't really be touching it. And I'm even going to tell you how I would personally buy or trade QRTA if I had to do it in my portfolio. So again, I really hope you enjoy this video. So Curate sells a lot of products on TV. They have some of their own brands, but they have other popular brands. And from my understanding of the company, they are mostly selling that stuff on cable TV, which is really pretty much going out. Most people buy things online. They buy things on Amazon. They buy things that they see on Instagram, some influencer wearing them, or some type of advertisement on the internet. They're not buying much things on TV, which is why a lot of people have an older age actually use Curate to buy a lot of those different things. But the company again has been moving online in a lot of things, and if we look at their online usage, it's over 64% of revenue is actually coming online from an e-commerce website that they actually built. So they are trying to make a shift. But as we can see, the company has suffered a lot of different things. One of them is decline in people watching cable TV and stuff. Other ones had some macroeconomics issues that affected the company. They even had some type of a facility go on fire, and then it affected their net income. So it was a very bad year for Curate in 2022, which is why I'm not really going to focus on what they did this year. I'm going to try to focus a little bit on what's going, to happen next with the company. But the company's revenues declined again in 2022, and they were actually, a 14% decline of the e-commerce revenue from 2021 to 2022, and even their customer count actually has been declining. It peaked in December of 2020, and it has been declining every single year. And again, the company is declining, which is why it's trading at $11 is down over 92%. And the biggest problem with the company is their debt. They do have a lot of debt. And if we look at their debt profile and how the market is pricing this debt, their corporate bond, which is due in 2029, is trading at 24 cents on the dollar. Now, normally, whenever you have a bond trading at 24 cents on the dollar, I mean, this is, pretty bad. It's pretty much pricing in like the company is going bankrupt. The original yield on the bond is around 4% coupon. Now, the yield is around 30% on this bond because it declined to 24 cents. So the bond market is pretty much pricing it in like this company is not going to survive and is going to go bankrupt. And it's the same thing with the 2030 maturity date. The coupon is around 3.75%. Now it's yielding 27%, and it's trading at $27 on par, which is 27 cents on the dollars. And again, whenever you have something like that happening in the bond market, and bond market investors are pricing this thing within the bonds of any single company, normally this company is really not going to survive, because the bond holders, they do much more research than equity holders, and they really want to have their money. They want to be compensated for the risk of them actually taking on this whole debt. But you sometimes also have mispricings in the market where some bonds just get too mispriced because of treasury yields yielding 5.5% on the T-bill. Sometimes whenever you have such competitions, these bonds trade at a discount regardless of how the company is actually doing, which is what I'm going to try to evaluate in this video. Now, we talked about them having a lot of debt, but the company took a lot of initiatives to try to reduce this debt and pay it back as much as possible. One of the things they tried to do is they tried to, sell some of the fulfillment centers that they have and try to take a lease on it. For example, they generated around 340 million after they sold one of their, leaseback transactions. Then they did another one, 5 properties. They raised over 433 million. Then they leased another one and they sold it in UK and Germany as around 182 million US dollars. So again, they did a lot of things to really try to raise some cash and be more efficient in their business model to try to take this cash and pay down the debt. And the new management has been, so far actually doing a pretty good job at, raising some capital to try to pay down the debt. But looking more at their balance sheet, now the company has around $1.2 billion, almost $1.3 billion of cash, and their long-term debt, which is actually not much, it's only $5.5 billion. They have some more obligations, some preferred stock and stuff, but in terms of long-term debt, it's actually $5.5 billion, and they have almost $1.3 billion in terms of the balance sheet on cash. But if we look at the company's free cash flow, I am actually very, very impressed with how resilient this free cash flow has actually been over the years. And this is one of the reasons why QRTA was able to survive after 2009 and go up 1,658%, because their free cash flow is much more resilient than I actually imagined. I would have imagined this company having anywhere from $100 million to $1 billion, it being all over the place. But it's actually been pretty stable, around $900 million to $1 billion. In 2011, they had around $602 million. And this is what the analysts are expecting. They are expecting $700 million in 2023 and over $1 billion by 2024. And 2 analysts are actually doing those expectations on this company. But I'm not going to try to use them. But again, if you could do pretty simple math with this company, if they can keep generating $900 to $1 billion of yearly free cash flow, they can actually pay back the debt that they have every single year, and the company can survive. Now, with the cash balance that they have of around $1.2 billion, they can pay their 2023 and 2024 debt with this cash position. But the question is, what are they going to do after? Because in 2025, they have $600 million of debt. They have $545 million in 2026, plus pretty close to a $2.7 billion revolver credit facility, which they're going to have to pay down unless they can maybe, refinance it to a later date and then push it up another 10 years. And it will likely not be at the interest rates where QRTA has their debt, which is around 3 to 4% coupons, which is, again, locked in at a pretty low rate for such companies' business model. So the big trouble for the company is in 2026. But they have enough cash to survive in 2023 and go even into 2024. And depending on how their free cash flow actually is over those 2 years, maybe they can raise $2.5 billion of free cash flow and try to pay down some of the debt. But even if they do raise this free cash flow, it's not going to be enough to pay, the revolver, or pretty close to $2.7 billion and $545 billion of long-term debt. So it's going to be a lot of debt on the company, and they're likely going to run into trouble in 2026. Now, this is how I would personally value QRTA, which is pretty hard to value. I'm not really counting on them staying at $1 billion of free cash flow. Although the analysts are expecting $1 billion in 2024, but I'm not really counting on it. I would rather use a shorter number like $700 million in 2023 and try to estimate that TV ads and stuff are going to decline in the future. People are going to go more and more to Amazon, not go shop on QRTA and those type of websites. So again, if we use the $700 billion of free cash flow for the company's current market cap is $480 million. But I believe we should value this company on enterprise value, total enterprise value, because they do have a lot of debt, and this is the main issue with the company. So if we use this $700 million and the enterprise value is pretty close to $7.5 billion, this is more than 10 times free cash flow on this company. Now, 10 times free cash flow for a company that's declining in pretty much everything, that has those bonds priced in at this level, in my opinion, is very, very expensive actually at 10 times free cash flow on enterprise value. If it was trading at 2 to 3 times free cash flow on enterprise value, meaning with debt and everything, that would make it much more interesting to me. But for it to be trading at 10 times enterprise value on 700 million of free cash flow, which I personally believe is very, very fair, I believe the company is not as cheap as people believe. But here is the trick. If they can actually use this free cash flow to pay down the debt, like we talked about, the company is going to be much more attractive, than people actually believe. And there's something else that they can do, which is not really factored in a lot of investors' research. Because if they do have, for example, let's assume the 500 million by 2028, and if the 500 million bond in 2028 is trading at 24 cents on the dollar, they can actually buy some of it in the open market at a huge discount, and the entire debt is going to be much less than 400 or 500 million dollars. So they can actually buy back their debt at a discount if it's still trading at a discount in the open bond market. Some of those bonds have restrictions where they can't do that, or they can do some of it, but if they can go on the open market and actually buy those bonds back directly, which they can actually do, and CoreCivic has been actually doing that. They bought some of them at a discount in the past. QRTA can actually do the same thing, and then the total debt will be much less than people actually believe. But the bond market actually scares me a lot with this investment, that maybe there's something that we actually don't know for it to be trading at 24 cents on the dollar and yielding 30.5%, on the 2029 bonds and around 35% on the 2028 bonds. I would normally go and say the market is wrong, and I would go and buy this investment like I did with many companies like GO and CoreCivic. But GO and CoreCivic, they had their bonds around 95 cents, even 100% on par. Sometimes CoreCivic had 105 on their debt. So it was sometimes actually trading at a premium because the company is pretty safe. So I trust the bondholders here, and the bondholders are saying we shouldn't really be touching QRTEA. And I believe this is why Michael Burry actually sold this investment. And this is a big mistake that a lot of people make. They go and they want to buy a stock that Michael Burry actually bought, and then after a couple of weeks they say, oh, Michael Burry sold the stock, and then they're still holding it. Now, whenever you have something that QRTA or something like Lumen Technologies or some of those companies that are in a free fall, and you don't know if it's going to go under or not, you must have some type of a risk management strategy. And what Michael Burry does, he buys it whenever he sees strength in the chart, meaning whenever it bounces a little bit, it feels like the price is stabilizing, and if it does make a new low, Michael Burry would exit the position and he would cut it out. This is what he said before in his MSN articles, and this is what he normally does. So whenever you're trying to buy a Michael Burry stock, if you really want to, invest in it just because Michael Burry owns it, in my opinion, you should implement similar type of a strategy like Michael Burry actually talked about in his MSN articles. Whenever he buys a stock, he has some type of a stop loss on a new 52-week lows. And if the company does make a new low, it means that the chart is weak. It means that the company could go below. So he cuts his loss and move on. But a lot of people buy those Michael Burry stocks and they hold them and they dollar cost average, like they're buying Coca-Cola or like they're buying, Amazon or Apple or Nvidia or whatever. You should not be treating those cigar butt stocks like you treat any company, any mega cap, stock like Google or Amazon or whatever. You should treat them as cigar butt. You have to be humble enough to say, maybe the market actually knows more than I do, and maybe you should exit. And this is how I would personally trade QRTEA. I would wait for the price to stabilize, see if it's holding up at a certain level. I would try to build a position and then maybe put a loss of me trying to cut my loss if it does make a new low, and then I walk away from this investment and I just don't touch it again. This is how I would trade something like QRTEA. And if I'm right and I do catch the bottom on QRTEA and the sentiment changes, the upside is going to be huge. But if I'm wrong, and if the bond market is right and QRTA is going to zero, like whatever is priced in, although I don't believe so, because they have a lot of ways they can generate free cash flow. But let's assume the bond market is right and QRTA is going to zero. In this case, you're going to be wiped out. And this is not a good risk reward you would want with such such investment, which is how I would personally try to buy QRTA. Maybe I take a shot on it, maybe not, but I'm trying to help you guys and tell you how Michael Burry actually thinks about it, because he said it in his MSN articles, yet people buy his stocks and they buy them and hold them forever, and they keep averaging down 50, 60, 70, 80, 90%, while Michael Burry has been out weeks ago because the stock made a new low. So you have to know how Michael Burry thinks before you try and buy his investments, in my personal opinion. So this was my thoughts on QRTA. I hope you enjoyed this video, and I hope you learned something. I hope you liked it. If you did, consider subscribing and maybe press the like button, and I hope to see you in another video.